long straddle. Okay, again, it's a very simple strategy, nothing complex. What you do is you buy call and you buy put as well. You do both the things. It's a simple option buying strategy. But what you do here is you buy at the money call and you buy at the money put. Okay, so let's say they are priced at 100. Okay, so you buy at the money call, you buy at the money put, both are priced at 100 rupees each. Okay, now see, the first thing is, the question is that, yes, how will I make profit in this? How do I make, how will I actually benefit from this? Okay, so the first thing that you need to understand is that this is not a strategy based on a view or based on a bullish view or a bearish view. This is a strategy based on a volatility view. Okay, so this is a strategy based on a volatility view, that what you're expecting is, you're expecting increase in volatility. Okay, this thing we have discussed previously as well. I've told you this: volatility increases, premiums increase. Correct? Volatility decreases, premiums decrease. So what you're expecting is, you're expecting an increase in volatility, because of which what is going to happen is these premiums are going to increase. There's going to be a massive move towards upside or downside, which you're not sure about right now, but you are sure about an event. It could be a budget event, it could be a news or RBI event or something like that, that you're sure that is going to bring a good volatility in the market, which in turn is going to increase the premiums. So you are trading on volatility, not on a bullish or a bearish view here. Okay, so that is called a long strategy. Once the volatility kicks in, the premiums will spike, which in turn will give you profit. A massive move comes in. See, because here, let's say a massive move comes in of 300 points towards upside. What will happen is, this 100 will go close to 250 or something, and this 100 will go down to 50 or something. So you make a profit of directly 150 and minus 50, a profit of 100. Even though you didn't had a bullish or a bearish view, you just had a view on the volatility. So mostly this strategy is applied before budgets, before RBI meetings, before elections, where you are anticipating a big move in the market, but you're not sure about it. Which side is it going to come to? Okay, so whichever side it comes to, you will be beneficial. Okay, so the most long straddles are applied before the budget, because budget every time gives you a V-shaped move, which is really good for the option buyers. So this is a strategy mostly suitable for budgets, which definitely gives you a profit every year. Okay, mostly. What I would suggest is, start building it. See, budget generally comes in the first week of Feb. Okay, what I would suggest is, if you're looking to build a long straddle, start building it before 2 weeks. Okay, don't build it on the day of budget or just 2-3 days before budget, because move will start happening before budget, not after budget. Bhi move aayega, that is correct, but the build up and everything will start happening before it. So ये नहीं होना चाहिए कि you're building this near the budget, तब तक premiums have already shot up, volatility has already shot up, because market is something which discounts everything. So it will try to discount this budget thing as well. They will try to predict what is going to happen in the budget. Because of that, volatile moves will come into the market. So you have to get in before that. So start building them 2 weeks before or a week before at least. Don't build them a day before or on the day. You can do it on the day as well. You will still make profit. But remember, at that time, you will be buying expensive premiums already. Because volatility would have kicked in already. So try to build it at a time where the volatility is still less and the event is coming near. Okay, that is the best time to build it. The best time to build a long straddle is when the volatility is on the lower side, not on the higher side. Okay, volatility is on the lower side and you're expecting that to increase. Maybe VIX is at 15, you're expecting it to go till 30 or 25 because of some event. That is when you apply long straddle. Okay. Just to tell you your break evens here. Again, break evens don't matter much because you don't hold long straddles till the expiry. If I'm building a long straddle, once the volatility kicks in, the move kicks in, I will exit once I'm happy with the move. You won't generally hold long straddle till the expiry. Doesn't make sense. Then only the decay thing will happen. Okay, but still, just to tell you your your break evens. What you have to do is, for example, I am buying 17,000 ATM call, 17,000 ATM put. Okay, so what is the total of this premium that I've paid? That is 200. So my break even will be 17,200 to 16,800. Okay, that is 200 plus and 200 minus from the strike price that you have bought. So this becomes your break even. That is, market has to close above 17,200 or below 16,800 to give you a profit on expiry. But again, you won't hold long straddle till expiry. There's a very less chance you'll do that. Only it will happen if you have just built it before expiry. That is a different case. But most of the times you will exit once the move comes in. Once a good spike comes in, 100 becomes 200 or something, you'll exit. Okay. But still, this is how the break even is calculated. So the total money.
But most of the times, actually, volatility crunch happens on budget day. Like 2021 was an exception.
On the budget day, that crunch happens. On the budget day. Because at that time, the volatility has already risen. So that's what I'm saying. If you are looking to implement this, you have to implement this a week before or a 2 week before. Because every time you see before budget, a selling comes in. Last 2 years, this is happening. A selling comes in. So you have to, and when I'm talking about selling, I'm not saying a selling of 100, 200 or 300 points. A selling comes of 1,000 points directly. So you have to start building it at least a week or 2 weeks before, because that is the time when volatility is on the lower side. On the budget day tak to aate your volatility already is high, because everyone is anticipating what is going to happen. People are, they are taking back their money, they are withdrawing their money from the markets because they're not sure what is going to happen in the budget. If something wrong happens, their portfolios will get stuck. So to make benefit out of it, rather what I would suggest is, instead of applying this on budget, apply this before budget, a week before or a 2 week before. उस time पे premiums भी थोड़े, you'll get, because 2 weeks पहले कर रहे हो of the month expiry, तो premiums भी थोड़े expensive होंगे, they'll be 200, 250 like that, but that is still fine, because the moves that come in are of 1,000, 1,500 points, so you will still make profit. Okay, rather instead of going with, on the day of expiry, your weekly premiums will be 200, 150, 200. So won't make sense. Okay.
So basically buying around 200, 300 rupees and selling around 500 or like 600 premium.
Yeah, buying not 300. 300 becomes too much because you have to buy at the money. Okay. So at the money 300 come chance hai. 250 ke aspas I'll suggest go and buy. Don't go for 350, 500 because you're buying at the money. So let's say you're building it a week before. So at the money ko the premium that you'll get will be close to 225, 250. Okay, because weekly ka jo hota hai, same week ka you get on Monday, you get close to 100, 120. So agar ek hafte pehle ka hai, so it will be mostly double of that, 200, 250. 300 bhi hai, so you can go for it. There's no worry. Again, it's difficult to tell the price kya hoga because different factors hote premium ko affect karne ke liye. But buying it near 250 is fine. 300 is also fine, but you have to just remember the main point.
Okay.
So यश अभी जैसे FOMC का मीटिंग होने वाला है एंड लोग सोच रहे हैं कि थोड़ा वो इंटरेस्ट रेट जो है वो बढ़ाएंगे दोबारा, तो 4th को अगर कोई ATM का कॉल और पुट दोनों खरीद लेते हैं, is it okay or we should avoid that?
See, you can do that, okay, but remember you are expecting a move in the market. Okay. See, you have to understand this thing, that a move in the market depends upon the event that is happening. Okay. The budget event is a higher probability event where the move definitely kicks in. This meeting is a good enough event, but not that much as compared to a budget. So what I would suggest is, yes, you can play on it, but go in with lesser lots because there is a less probability that you will get a very big volatile move. Okay, so you can still play it, but what I would suggest is budget pe ja rahe ho to go for a good amount of lots. But if you're going for small meetings, जैसे RBI का small interest rate meeting है या some meetings like this, go for it. I'm not saying no, but lesser number of lots because these are not very big events which are gonna give you 1,000, 1,500 point moves like budget. Okay, this can also happen that they might not give a big move at all. So that thing you have to keep in mind. So since it is not a very big event, just reduce the number of lots. Okay.
US markets में यश I guess movement आ रही है पिछले 2 हफ्ते से, like market गिर रहा है constantly.
Correct,
So I guess
correct.
वो discount हो रहा है basically FOMC का result, I guess.
True. So that's what I'm saying. See, since it is on 4th, you don't build it on 4th. If you know it is event is on 4th, you have to build it before it, a week before it, or 2 days, 3-4 days before it. Because तब तक फिर जैसे I've said before as well, that market will try to discount that thing. So you need to keep that thing in mind. Okay.
आयुष अगर आप एक बार इस पे सेंसिबल कॉल और पुट एक बार बाय करके दिखाते हैं मार्केट का तो
हाँ, sure. So you buy this call, that is gray at the money, and you buy at the money put. So this becomes your long straddle. Okay, your maximum loss is 12,000. That is 107 plus 133 into 50, 12,000. Maximum profit is again unlimited. Okay, break even are not important in long straddle, but since still if you want to check, addition of that and then add and subtract them from ATM. So 16,859, 17,340. Okay.
तो मार्जिन किसी एक लेवल को क्रॉस करेगा तो प्रॉफिट बढ़ता जाएगा.
Yeah, that is for expiry. ठीक है, जैसे अभी for example, I'll tell you one thing. If market closes at 17,341 on the day of expiry, you will make 50 rupees. Because 17,340 के ऊपर you have profit for on expiry. ठीक है. But as I'm saying, long straddles are played for a shorter while. Okay, you don't wait or you don't hold them for a very long time. Okay, or at least till expiries. Okay.
Yes, you're talking about 2 weeks over here. So you're telling Feb May and our budget comes in Feb. So you're telling that you need to build this position by Jan 15th or Jan 20th and hold till Feb first week.
True.
Correct?
True.
So ये monthly expiry is it monthly expiry or Feb second week expiry लोगे आप इसमें?
I'll suggest go for Jan month expiry. Because budget will happen on 2nd Feb, 3rd Feb like that. Okay.
Correct.
तो budget के पहले का जो move है, that will happen in the previous week itself.
Okay.
Okay. You can check the data, you can check the historical charts. You will see the move happens in the last 2 weeks of January always.
This time it also happened, like you remember market was at 18,300 and it kept falling till 17,000.
True. Okay.
Like
So
600, 700 fall before.
Correct. So that is what you have to do.
But someone I want to hold this till budget. Then I'll have to go for Feb second week expiry or Feb monthly expiry, right?
Then go for the Feb first week expiry, weekly expiry.
Feb first week expiry. Okay.
Yeah. Okay. Okay, so this is your long straddle. Okay. Now, if I want to do opposite of this, ठीक है, like for example, someone said कि budget पे volatility crush होता है, right? Because already very high volatility होती है at 25-30 and now market starts becoming stable. So because of that, now volatility starts coming down. So when volatility starts coming down, what will happen? Premiums will fall. So if I want to play this, if I want to play the decrease in volatility, what I'll do? I'll do the exact opposite. I will sell at the money and call and sell at the money put. Because I know what is going to happen. Premiums are very expensive. They are close to 200. And now I'm expecting a decrease in volatility. So because of decrease in volatility, both of these premiums will decay, which will give me profit, which is called a short straddle.
It won't matter if market is going up or down if the VIX is crashing. Like this budget, VIX crashed around 7 to 8% and market fell, but the put option premium was also falling.
True. See, because the reason is it is already overpriced. It is priced at 200 thinking that market will give you a move of 500, 600 points. But market only gave a move of 100 points towards downside. So that affects the premium. See, because premium is what? Premium is nothing but expectation of people. अगर प्रीमियम 200 है तो people are expecting कि 200 point का move will come within a shorter span of time. So if they see that is not happening, this expectation will start coming down. So this premium will start falling. People will start understanding कि okay, bigger move is not going to happen. So automatically the sellers are going to decrease their asking price. which in turn will start. Yeah.
इस बजट पे यश एक्चुअली यही हुआ था, लाइक बैंक निफ्टी फेल अराउंड 600-700 पॉइंट्स इफ यू रिमेंबर इट, बट पुट ऑप्शन का प्रीमियम भी गिरा था, so that was quite bizarre.
True. So that happens. So that volatility crush happens a lot. Okay, this is called IV crush. I think someone asked this question that day as well, right? That you can you do this thing once the results are out?
Yeah, I was the one that was asking this question.
Yeah. So this is the same thing. Okay. But again, the problem with this short straddle is that you can do this. Yeah, good. You will make profit once the premiums come down. But the problem with this is, first thing, the capital, because you are selling two naked positions. So this will require a capital of close to 1.2 lakhs or 1.5 lakhs close to approximately. Okay, which in turn is very big. Okay. Second thing is, again, you are selling two naked positions, which keeps you open to unlimited risk.
अचानक से काफी बड़ा मूवमेंट आ गया.
Exactly. So if you know something, actually you are expecting a crush in IV, but exact opposite thing happens. You know, market runs up a lot, suddenly something happens, you will get caught. Okay, so to solve this problem, what you'll do, how do we solve this problem of unlimited risk and bigger capital?
Buying the OTM call input.
Exactly, we hedge the position. Okay, so what we'll do, we will go and buy out the money call, that is cheaper call, and we'll go and buy out the money put, which is a cheaper put. We will do this. Okay, and they'll be, let's say this will be priced at 20 rupees, this will also be priced at 25 rupees, for example. Okay, so once you do this, what will happen, your capital requirement will come down to 60,000 approximately, and plus, since you have bought options, now you are not open to unlimited risk, you are open to limited risk. This thing I explained, right? That once you hedge the position, you cannot make an unlimited risk. Okay. So basically, if you see this, right, if you see these two things individually, this is a combination of our first two strategies. I am selling expensive premium, buying cheaper premium. Selling expensive premium, buying cheaper premium. So this is a simple combination of bear call spread plus bull put spread. But in this, the condition is that you have to sell at the money call and sell at the money put. That is what is short straddle.
हमने जो short straddle अभी hedge किया, that's become like an RM fly, no?
Yeah, this is what I'm going to say. So once you hedge this position, then this strategy is called iron fly. Okay. If you keep it naked, it will be called short straddle. If you hedge it, it will be called iron fly. अब इसमें क्या होगा कि once it starts decaying, okay, this, for example, it starts decaying and this 200, both 200 becomes, let's say, 50-50. Okay, and both this 20 and 25 that you bought, they came close to 2 rupees and 3 rupees. Okay, this 200 became 50, this 200 became 50, this 20 became 2 rupees, this 25 became 3 rupees. Okay, so in this 50-50, you have made a profit of 150 and 150 both. That is a profit of 300. Okay, and here you have made a loss because this 25 has decayed and this 20 has decayed, which you had bought. Okay, so here you make a loss of close to 18 plus 22, which is 40. So you minus 40, 300 is plus 260. So still you make a profit with reduced capital and limited risk. Okay, so what I'll tell you is that you can apply short straddle, there is nothing wrong in that, but it doesn't make sense. Okay, in terms of ROI as well, in terms of risk as well, iron fly makes more sense. You might think, no, I don't want to make a loss in the hedging position, that is buying OTMC and buying OTMP. I don't want to waste my loss in that because 20 will become 2, 25 will become 3, so I'll be losing 40 points. But you need to understand, you are getting this for 60,000 and you are getting short straddle for 1.5 lakhs, 1.4 lakhs. So is capital mein to you can make 2 lots of iron fly. So plus 260 ki jagah you will make plus 520. So automatically you will make more profit in iron fly. So that is why short straddle doesn't make a sense.
Yes, Adarsh, is it IRMI used for sideways market as well?
Yeah. See, what is sideways market? Sideways market is where market is not range bound. Okay, what will happen? Premiums will keep on decaying.
Correct.
So whenever you're expecting decay in premiums, you know that highest decay, we saw that highest theta is of at the money call and at the money put.
I just created this thing, IRMI on Nifty on Thursday, last Thursday. It is like, how do I tell you? I am doing on 6 lots. Up to 5,000, it's around plus in that. And I found it more better than doing a long shot hours bull put spread in Bank Nifty as well. But compared to bull put spread in Nifty, it gave, the IRMI is better than IRMI was a better option to do.
See, because market was range bound. If it is range bound, then both call and puts will start decaying. So that is in turn better. If market is range bound, these strategies are better. If market is trending towards one side, then the previous strategies are better, like we have discussed. Okay. So this is your short straddle and arrow fly. Okay. Now, one more thing that you can ask is that, Yash, why only at the money? Why can't I, for example, I'm applying long straddle only, but I want to buy OTM call and I want to buy OTM put. Don't you think I can do this? Because this will be cheaper to me. OTM call will only be 10 rupees. OTM put will only be 12 rupees. So why can't I do this? See, because if volatility will increase, these premiums will also increase, right? So why can't I do this? Instead of paying 100 rupees of at the money, why can't I pay cheaper premium of out the money and do the same thing? So here the funds required would be only 22 into 50, which is equal to 1100 rupees per lot. So this is cheaper than the previous one. Plus this will also fetch me profit if volatility goes up, because these premiums will also go up. So why can't I do this? Yes, you can do this. Okay. And if you do this, this will be called a long strangle. Okay. But again, you need to understand the difference.
See, I guess the break even will increase, right?
Yeah, true. Your break even will increase a lot, and you need to understand. See, we saw that day as well in option chain that which strike price has the highest Vega, that is ATM, right? We saw that Vega and theta is highest at the money strike price, okay, not out the money. We saw that their Vega was 15, 16, whereas Vega for out the money was only 5, 6 like that. So that is the difference that you see. तो यहाँ पे don't expect कि ये 10 सीधा 40 बन जाएगा and ये 12 सीधा 55 बन जाएगा. That won't happen. Okay, the move will also be very slow. Okay, rather if you want these premiums to increase, really nicely, you require a bigger move. You require a move of 700 points, 800 points like that. Then only this position will fetch you a good profit. If it only gives you a move of 200, 300 points, then they won't fetch you good enough profit. See, because what will happen is they are already out the money. So they will decay faster, expecting the market is not going to close above them. So they won't fetch you a really good profit. But because it will take time for OTM to become ITM, right? Whereas here it is already ATM. Even a 100-point move will make this ITM. अब ये ITM बन जाएगा तो क्या होगा? इसका delta increase हो जाएगा. Delta increase होगा तो this will increase faster. The premium will increase faster. But यहाँ पे क्या होगा? This OTM, if only 200, 300 point move comes, this will still remain OTM, and delta won't increase much. So the increase in these premiums will also be slow and less. So the basic understanding that you can get is that apply a long strangle when you are expecting a very big move, or you can say very big increase in volatility. You are expecting very big increase in volatility is equal to 800, 900 points. Okay, whereas long straddle, even if 200, 300 point is there, you will still make a profit, a good profit. Okay, so the only difference between straddle and strangle is how bigger a move you're expecting. If you're expecting a very big move, go for strangle. Strangle is much better. If you're expecting a fine move, go for straddle. I'll give you an example. Let's say this is 17,500 call and this is let's say 16,800 put. Okay, right now market is at 17,250. Okay, market gives you let's say 200 point move. Okay, that is it goes to 250 point move. Let's say it goes to 500. Okay, that is this move it is giving, small move. Okay, so what will happen is on expiry this will also become 0, this will also become 0. So rather you have made a loss. But talking about this, what will happen here? 17,000 okay, let's make it 17,250 because we took 17,250 here, right? Yeah, so at the money kya hoga? 17,250. If market is closing at 17,500, this 100 will become 250, correct? And this will become 0. So here you have made a profit of 100 to 250 is 150 profit. Here 100 to 0 is a minus 100 loss. You have made a profit of 50 points. Okay. So that is the thing. Even if a small move comes, straddle will give you a profit. Whereas for strangle, you need a very big move. Okay. So depending upon the view, see if you are expecting a very big move, then going for straddle doesn't make sense. Because strangle will give you a very good ROI. See, because if you're expecting a move, let's say till 18,000 from 17,250, you know these premiums are going to shoot up by this C. This will become 0. Put option will become 0. That is true. But this C is going to become 500 from 10 rupees, from 10 to 500, which is a clear-cut profit of 490 rupees per lot. Not 490, actually minus 12 as well. So 478. Okay. So this will fetch you more profit in terms of a better ROI as well. See, because here you had only invested 1100 rupees. Do you get my point? Yahan pe you had invested more money, straddle mein. 100, 100, 200, 200 into 50 is, I think, 10,000. So wahan pe 10,000 mein you are making the money. Yahan pe 1100 mein you are making the money. So 10,000 mein to you can go for 10 lots, which will give you a profit of 4780 rupees per lot. Or something like in that sense. Okay. So that is the difference. Bigger move, strangle, smaller move, straddle. Simple as that. Okay. So iska opposite kya ho jayega? Short strangle. For example, I'm expecting the market to be range bound. Market right now is at 17,250. Okay. And this is your 17,500. This is your 16,800. So I will sell the call here. I will sell the put here. Okay. This will make short strangle. How? 17,500 is OTM. 16,800 is OTM. Okay, so I'm selling OTM, selling OTM call, selling OTM put, short strangle. Okay. So do this when you're expecting a range bound market. Just now I explained, right? If range bound market is there, going for this thing is better. Okay, now you can have this thing that yes, which one is better? Short straddle or short strangle. Okay. See, short straddle will give you more profit, but less probability. Here, less profit, more probability. That is what you need to see, because यहाँ पे you are selling OTM call. इसका premium कितना होगा? Hardly 5 rupees. इसका कितना premium होगा? Hardly 7-8 rupees. So your profit is only this much, 13. But it is a safe profit because you are having 250 points का safety here and 450 points का safety here. So you are having a safety net here. So that will accordingly make it more safe, but less profit because you are selling OTM. So that will fetch you really less premium. यहाँ पे you are getting a really good premium short straddle में 200, but again the probability is less. क्योंकि यहाँ पे ATM भी है 17,250. तो market has to close near to 17,250 only, तभी you will get good profit. Because 17,250 पे close होगा तभी ये zero बनेगा. अगर 17,300 पे close हो गया तो this will become 50, this will become 0. So you won't make the entire profit. Market closes at 17,500, then this will become what? 250. So you'll make a loss of 50 here. Okay, and here you'll make a profit of 200. So that thing you need to understand कि यहाँ पे safety net is a little less, and short strangle में जो है their safety net is really good because market has to go above 17,500 or below 16,800 to fetch you a loss. Till then it is within this range, you are going to make profit. Even if it falls by 300 points and comes to 16,950, you will still make this entire profit. Whereas in short straddle, you will start facing problems. Okay.
Yash, can this be hedged as well?
Yeah, that's what I'm coming to. Okay. See, again, the same problem will happen. You are having two naked positions selling. So capital problem, unlimited risk problem. So what you'll do is you will hedge this with a cheaper premium. So I will go and buy 18,000 call, which will be hardly 0.2, 0.3 like that. And for this as well, I will go and buy a cheaper OTM, which will be hardly 0.3 or something like that. Okay. What will that do? That will reduce the capital, reduce the risk. Simple. So this will be then called iron condor.
Yes, I have a doubt for long straddle. Can we implement that strategy if we are expecting a big gap up or gap down? Like we can exit at the open of the market. For example, I'm expecting the 100 point gap down.
Definitely you can do that. See, because gaps increase the volatility. Whenever you see a gap, you see a increased volatility in the market. Big gap down, big gap ups. So definitely you can do that.
So when can I expect a volatility crunch? Like one time it happened with me. Like मैंने call और put buy कर रखा था, gap up अच्छा खुला, gap down sorry. But put का प्रीमियम काफी ज्यादा डीके हो गया. इंस्टेड मतलब कॉल का ज्यादा पड़ा नहीं, पुट का ज्यादा डीके हो गया. और प्रीमियम ऐसा ही था कि कॉल का 318 था और पुट का 322 या 25 के आसपास था. Almost.
See, you need to also see you are applying long straddle, that is fine, but also you need to see at which IV you are applying that. If you are applying long straddle at VIX 25, doesn't make sense.
25 पे लगाया था.
हाँ, तो then that is that will not give you, क्योंकि VIX already high है. अब 25 से अगर you are expecting 35, which is a very rare case, तब it will make sense. अब क्योंकि फिर अब 25-30 पहुंच चुका है, वहां पे VIX का रेजिस्टेंस है, तो वहां से तो नीचे ही आएगा.
बट ये बेयर मार्केट में तो यही होगा. बेयर मार्केट में जैसे VIX तो इंक्रीज होएगी बट मार्केट गैप डाउन खुलेगा, तो उस केस में एक्सपेक्ट कर सकते वॉलेटिलिटी क्रंच. Exactly. So yes, this will be better in case of a bull market. The bull market में अगर big gap up is expected.
True. Correct.
Okay.
Okay, see, because you're expecting a decrease in volatility because it has reached resistance. So that is why. So that is the perfect time to apply the opposite of it.
Okay.
That is short straddle. Okay, so with this we are done with the strategies. Okay. I've shared the notepad. Notepad has some further informations as well which you can go through. Okay, and